When you thought the market had shown all of its cards, the game changed in a big way. Welcome to a time in the history of the stock market when the unexpected happens. Just a moment ago, everyone in the financial world held their breath in expectation. Elon Musk, the mysterious CEO of Tesla, just dropped a bombshell that has Wall Street caught off guard. In an early morning tweet today, Tesla said that at its annual meeting this year, Tesla will ask its owners to approve the sale of more shares so that a stock split can happen. This morning, Tesla also filed a new 8K with the SEC that explains the same thing. Don't be confused by the language. It does talk about a dividend, but it's a stock payout. This is the same split structure that Tesla used before, so this is not them setting up a cash dividend every 3 months on the stock. This morning, Philbo of CNBC shared on Twitter that Deutsche Bank has raised their earnings expectations for the first quarter. The news I haven't seen talks about. But Phil says Deutsche Bank said they are raising their predictions because after this quarter. We're still impressed with how well Tesla is managing its operations in spite of problems in the industry's supply chain and how strong its pricing power could be in the face of high raw material costs. This is a conclusion that is very similar to what other analysts have come to. In today's special episode, we'll go into more detail about this groundbreaking announcement. Elon Musk made a new move that could affect Tesla's stock. How will this affect investors, the market, and the future of this electric car? Powerhouse. Let's solve the puzzle, look at the ramifications, and explore the uncharted areas of Tesla's market journey. We'll cover everything, from the small print to the big picture. This isn't just another market report. Here's Tesla stock news, where finance meets the future. Stay tuned, because we're about to go on an exciting ride through the world of stocks, Elon Musk's genius, and the strategy of his companies. Hello, everyone. Welcome to an exciting episode of Tesla Stock News. Also, please subscribe to our channel. Now that the holiday season is well underway, let's get started. There is a unique subject that needs our attention. Tesla's possible third stock split today is the right time to talk about something we haven't talked about on this channel before stock splits. With what looks like another big rise for Tesla on the horizon, it's important to know both the pros and cons of them. Tesla's success during its last 2 stock splits is interesting to look at, but keep in mind that past performance doesn't mean future results will be the same. When Tesla's shares split for the first time in August 2012, they went up by 81% between the announcement and the real split. They then went down by 14% the next month, but they recovered amazingly, going up by about 36%. 6 months after the split, this 5-for-1 split raised the number of shares by 5 times while lowering the price of each share by 5 times. Fast forward to August 2022, when Tesla announced its second split. The goal was to make it easier for employees and investors to own Tesla stock. Before the split, the stock was trading around $1,900, which was a big jump from over $2,000 before the first split in 2020. After the announcement, the stock went up about 46% to about $1,311 per share, but it then went down 15% after the split. Tesla's journey took a big turn when CEO Elon Musk started talking about buying Twitter and selling Tesla stock. This was a big moment in the company's history. And it's also been noticed that Tesla stock has gone up incredible amounts since its last 2 splits. Due to different market conditions as we move toward 2024, the first split did much better than the second. Market rumors point to the chance of 6 to 7 rate cuts, which could create a situation similar to 2020. Even though interest rates aren't zero yet, they are going down, which is a good thing. Weakness of the market rate cuts are a way for central banks like the Federal Reserve in the US to get the economy going again. By lowering interest rates, borrowing money becomes cheaper for both individuals and businesses. This can lead to more spending and investment, which can help the economy grow. What people think will happen in 2024 likes the way the economy is in 2020 because of the COVID-19 pandemic. To lessen the effects on the economy, central banks all over the world cut interest rates to almost nothing. These cuts were part of a larger plan to keep the market liquid and encourage spending and investment during a time of global uncertainty. While interest rates are not expected to drop to the all-time lows seen in 2020, they will likely be very low in 2024. A more flexible monetary policy is expected as a result of the expected run of rate cuts. This change is seen as a response to different economic indicators and pressures. Usually when interest rates go down, market liquidity, when it's cheaper to borrow money, when the economy is growing, businesses are more likely to invest in growth possibilities, and people may spend more on goods and services. This can make the 247 Wall Street talks about how likely it is that Tesla will split its stock again if its shares hit $400 per share in 2024. One reason for this is to make the stock easier to get, especially for people who can't buy fractional shares through some brokers like Vanguard. Stock splits also make stock-based pay easier for employees. Interestingly, past stock splits have served as catalysts significantly increasing Tesla's market attention. For instance, in August 2020, Tesla shares jumped 81% between the announcement and execution of the split. While stock splits don't inherently increase a company's value, they have historically. They attracted increased investor interest and retail inflows, posing challenges for short sellers. Furthermore, another stock split might position Tesla as a potential component of the Dow Jones Industrial Average, this prestigious index comprising 30 of America's most prominent companies currently lacks. An automaker since General Motors' removal in 2009, Tesla's profitability and status as an iconic American brand make it an attractive candidate. However, the Dow's price-weighted nature means that Tesla's stock price will significantly influence its potential inclusion and weighting within the index as of late 2023, only one Dow component trades for over $1,500 a share, suggesting a preference for Tesla to trade between $100 and $1,200 per share. Rather than higher prices above $1,400, it's becoming more likely that Tesla will split its third stock, especially if its share price goes above 400 or even 300,000 rupees per share. This could have a big effect on the Dow Jones Industrial Average, making sure that Tesla's performance doesn't have an unfair effect on the index with a share price of 1,400 rupees. It's possible that Tesla's market value will hit $1.25 trillion by 2024. The company has been on a good path, even though it has had to deal with inflation and the highest interest rates in its history. Tesla has continued to do well, and interest rates are expected to go down faster than expected. Market expectations could lower the cost of buying new cars, which could make people more willing to spend money. This could help Tesla's sales in 2024, but the company might raise the prices of its cars. One important thing to think about is the monthly payment. For example, an A1650-700 payment is easier for most people to handle than an A1900 payment. Even though this pricing plan will cut into Tesla's profits, it may be better for customers and Tesla in the long run. The fact that Tesla is currently valued low by the company shows how the market works. High interest rates and doubts in the media about Elon Musk's comments on earnings calls have also had an effect on Tesla's stock price, but there's still room for value growth in 2024. The price-to-earnings ratio could drop to around 100, which is a lot less than its peak of 1,200 in 2020 and 2021, assuming that earnings per share are $4.50. If EPPS does better than expected, Tesla's stock could be $1,450. It could go even higher. Opening the door for another stock split doesn't change the value of the company, but it can make the stock easier for more buyers to buy, especially those who don't have fractional shares. This ease of access could possibly drive the stock's price higher. For example, at companies like Berkshire Hathaway, where shares are in very short supply, the stock price is very high and changes a lot every day. A stock split raises the number of shares while lowering the price of each share, which could make the company less volatile. In some ways, increasing the number of shares that are outstanding could help Tesla keep its value and make its stock easier for individual buyers to buy. It is thought that if Berkshire Hathaway went through a number of stock splits, the stock might be less volatile and likely to go down in value less dramatically over time. A more stable value for the company might come from this. The two stock splits that Tesla has done in the past show that this kind of action can help keep stock prices that are too high, even when the company makes smart moves like lowering prices. Tesla's price has changed over time, but the stock is still much higher than it was in 2019. It's thought that the stock splits help keep this value. Stock splits can also bring smaller benefits to individual investors. For example, if a Tesla shareholder with 25 shares experiences a 1-for-4 stock split, they would now own 100 shares. This increase in share quantity lets the shareholder use different investment strategies, such as selling calls or looking for cheaper options. Trade based on what experts say stock splits have benefits, like making shares more affordable and possibly rekindling investor interest, but they can also cause volatility, like during a sell-off after the split. Dividend payouts if Tesla decides to offer dividends in the future. If another stock split is revealed, Tesla's price could go up by 50% or more. This is because investors are buying more and the market is becoming more stable. Tesla has seen a lot of new small investors, and the market as a whole is starting to see similar trends. The price of Tesla stock could go up a lot in 2024. In the second half of 2024, a stock split seems likely, especially if Tesla keeps up its good performance. But in the short term, Tesla's stock could go above $1,300 per share thanks to things like the launch of fully autonomous driving technology in China and good economic signs like falling prices and strong demand. If more money comes into the markets in early 2024, Tesla stock could reach all-time highs. While buying Tesla stock, just because of the possibility of a stock split, is not a good idea. The possibility of a big increase in the company's stock value because of a split cannot be ruled out, as we look ahead to 2024, the financial world is buzzing with the possibility of several rate cuts, similar to the economic strategies seen in 2020. These cuts, while not reaching the record lows of the pandemic era, suggest a shift toward more flexible monetary policy. This could lead to more market liquidity, which would boost economic growth and positively affect investor sentiment. Now, let's think about a few questions. What changes will you make to your investment plans because of these expected rate cuts? Do you think this could be the start of a stronger economic recovery? How do you think Tesla, a major player in the stock market, could deal with and gain from this changing financial climate? Feel free to share your thoughts and join the conversation. If you found this information useful, don't forget to click the like button. Also, sign up for Tesla Stock News to get more updates and analysis on how the market is changing. Enjoy your stay, and we look forward to seeing you in our next film.